Hello, everybody. Charles Cannon, Certified Financial Planner here. We're doing our third quarter review today. And let's face it, the markets have done great this year, right? Both the NASDAQ and the S&P 500 are up just about 21% year to date. And historically, we got a 50 basis point cut in interest rates. And historically, when we are near or at highs in the market and we get a interest rate cut, it extends the rally. Okay, that's great, right? The bad news is almost automatically after that 50 basis point cut, the first couple of things that came out tend to show us that inflation is not dead. And in fact, we were saying that ahead of time. Be careful with the 50 basis point cut because inflation will rear its ugly head again. We saw that both in the last week's hot jobs report, and now we're seeing the CPI report coming in warmer than expected. I expect the hawkish members of the Fed to really slow down our rate cuts. And I hope that's true because I think it's baked in that it'll be very difficult for them to get us back to a 2% inflation number. I think our best hope is to end around 3. I think it's baked into everything we've been doing. And so they've got to have expectations that are realistic. For you and the market, I hope that you are watching our other videos. If you did not see my economy video talking about the letter K, I invite you to see that again. If you are in my email that I send out, I've added a link. Otherwise, you've got to go to YouTube. And once you're on YouTube, search Charles Cannon CFP and watch my letter K commentary. I think that I am right on with where we are at in the market right there. So we're going into the presidential election. That is going to prove, I expect, to bring us a lot of volatility. But overall, I think that the markets ought to continue moving ahead. If you are at all-time highs in your portfolio, number one, rejoice. And number two, think about, is that the time to reduce some positions? We say buy low and sell high, right? If we're at all-time highs, now is when you should be thinking, take a little bit off the market, out of the market, and let's make sure that we provide for that lifetime income for the rest of your lives, because that's what your retirement is all about, folks. Let's protect the 30, 35, 40 years you just had. Often I say that and we're seeing it right now with the hurricane season, if you don't board up, you spend your time in cleanup. With all of our geopolitical concerns, we have a Fed that maybe or maybe not really has a handle on inflation. We don't want a tough market to hurt you long term. Protect your 35 or 40 years. This is Charles Cannon, Certified Financial Planner. Remember, lifetime income is the best part of your retirement. Bye now.